This is Robert Harper with Virginia Farm Bureau's Grain Division. Glad to bring you the Merchandiser Minute today, Friday, June the 18th, 2021, and a good day to everybody. What an amazing week we've had on the farm here in Virginia. We came into the week on Sunday and Monday, a lot of you receiving some much more needed rainfall, but the combines have really been rolling this week, getting into the wheat crop, finishing up the barley crop. It's been so exciting to hear each of you speak about the work that you've been up to, what you've gotten done, and exciting also to see the yields and the quality of some of the wheat that's coming in. We've also had unbelievable excitement on the futures board in Chicago. I say that every week. It seems like every week anticipation builds for what the trade is going to do, what it's going to be, and it seems like every week we fulfill that anticipation with a lot of market action. Let's take a look at how the futures closed out the week in Chicago. December corn trading this week a full 5 days, 17 and a half hours a day, with a 68 cent a bushel range for the week to close down 43 cents for the week at 5.66. November beans had a range of $1.90 a bushel this week, with the single biggest one-day loss in soybeans on the futures board yesterday, depending on which futures contract you look at, anywhere from 90 cents to over $1 a bushel loss yesterday. And we'll talk about that in a minute, but November beans, $1.90 a bushel range for the week, closed down $1.25 a bushel to close at $13.13. July wheat, we had an 18 cent down week per bushel to close at $6.62. Wheat seemed to handle the price volatility a little better this week than corn and beans. And y'all, there's so many variables right now in this market. You know them, you hear them, and I'm going to recap a few of them. We're definitely in our June, July, and August weather market. Y'all are used to that. We know that. We get a lot of volatility, but it's exaggerated this year. It's exaggerated going all the way back to the shutdowns that we saw, the demand that we saw being lost last year, the demand that came back into the market in the fall, the demand that has come back into the market this calendar year, inflationary concerns that are all over the marketplace, and a lot of speculators looking for yield that have money in their pocket. We've seen money flow change, money flow come back into agricultural commodities, old story, but that story is still present. And when we have the kind of money flow that we have in and out these markets, we rose to the levels we rose to, and then we've got a contrast and a switch. You've heard me say the last 2 weeks, market participation or volume in the futures market has really dropped back. And we've seen that volume drop back because a lot of participants have just stepped to the side and said, this market action is too volatile. We're going to take our money. We're going to set out. We're going to watch it. Now, that definitely gives us some potential in the future for funds to come back in, and we're hoping for that potential. But this week we saw some days where the bid and the ask on the board were pretty quiet, and we know that no humans trade futures anymore. The algorithms take over in the computers, and we can see these lock limit down type moves that we saw on the corn board this week, expanded limits in the soybean complex and taking beans down more than $1. We'll see that type of action when market participation gets low. So very interesting contrast there. But remember, we're definitely in a weather market. We could say here at the end of this week that maybe funds were squaring their positions, getting rid of some of their length as they anticipate the June 30th, that Wednesday, June the 30th acre report. That's certainly a fact. We could also say that the rumors that started more than a week ago about the Biden administration issuing waivers to oil refiners concerning the renewable fuel standard, how much ethanol will have to be blended into the gas, how long will maybe a waiver last, what's going to happen to soy oil in reference to biodiesel. All those questions were going around the market. And remember, we saw soy oil go limit down on Wednesday, which is what allowed for expanded limits on Thursday and took beans past that dollar limit. So all those things, whether it's renewable fuel standard rumors and the trade looking for a statement from the Biden administration, whether it's rain in Iowa or not raining, all those things, plus positioning this far out ahead of the June 30th report, created the volatility. And there's certainly influences that we don't even know about that created it as well. But what we're going to see going forward is more of the same. We're going to see more of the same. We have to prepare our minds, our emotions, and our marketing plans for trends that have big volatility, big swings in price during a week's trade, and also big swings in price during a daily trade. So we're all getting our mind set up around that. At one point this week, when we talk about looking around and it looks like water running up a hill everywhere we look, we know several weeks ago we saw hog futures trading higher than live cattle futures. That was another one of the strange things. Even yesterday with corn lock limit down, we also saw feeder cattle futures down, and we know for so long feeder cattle and corn have traded polar opposites to each other, and it was interesting to see yesterday just how widespread the sell-off was to have feeder cattle down and to have corn down. But again, what a comeback today. At one point to see beans up 70 cents a bushel, corn was up, the speculators were back in. Again, just increased volatility. And that volatility, if you look at a futures chart for corn and beans, you're going to see now that we've made a double top pattern. And many of you who call in and talk to Josie and I, we do talk about a lot of those technical influences that are on the trade. Give us a call next week and we'll talk about double top patterns and maybe what that means or needs to mean and how you think about marketing your new crop production. Also, take a look at lumber. As we look at lumber futures and we think about how this trade might be unwinding some of its inflationary nature, that inflationary trade that we've seen since the beginning of the year, buying everything low to hopefully selling it higher. We're going to take a look at lumber. We're going to take a look at some other things closer next week to see if we really are unwinding this inflationary trade or if this was just a blip on the chart and now we're going to head back up again based on weather and these other influences. So next week, that's what it's about. We get our normal reports like export inspections, export sales, crop progress. We're going to pay attention to those. And remember a few numbers from this week. USA corn progress came into the week looking back at 68% good to excellent. United States bean crop was rated 62% good to excellent. Those are right in with the 5-year averages. We got the NOPA, National Oilseed Processors Association crush report this week, and for the 4th month in a row, it fell short of expectations. We see that 163.5 million bushels of beans were crushed domestically in May. If we go back a year ago to May 2020, that was at 169 million bushels. So a little bit off, lots of things to look at. Give us a call here if we can help you at Virginia Farm Bureau with your new crop marketing, or if you have any old crop bushels to clean up. Stay safe in the wheat field and let us help you on marketing this year's wheat. This is Robert at Virginia Farm Bureau's Grain Division.